Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 31st of May. All right, now, as we come into the markets, just looking back on Friday's trading activity, the personal consumption numbers came in much better than expected. Well, slightly better than expected, but much better than the prior numbers. And keeping those inflation numbers above, the general 2% benchmark from the Fed is going to put upward pressure on the dollar. Now, you can see the initial spike here of this is the dollar index, I should say. But it was pretty short-lived. There was a few other numbers out, consumption numbers a little bit weaker as well. Personal income down. So, and then there was the treasuries, which sort of just drifted a bit lower as we came into the Memorial Day long weekend. Okay, so expect a very quiet Monday. We've got European and North American holidays. So I don't think the market's going to really crank into gear until at least Tuesday. And I expect sort of tight ranges. But what we've got is a situation where that little spike higher in the currencies on Friday, right? You see that dollar spike, and it's across the board. It's pretty short-lived, and now we're back in the ranges. So this would have flushed out a few, weak positions. And when we say weak positions, like small stop losses, small pain thresholds, right? People that don't have, or traders that don't have much of a threshold to hold position. So, but where are we now? Well, we're sort of in the balance still. Look at the dollar index. It's a good example. And actually euro, without those flush outs, the currencies are just still trading sideways. Aussie and Kiwi, I still like them lower, even though the RBNZ came out, gave us a bit of forward guidance that they would be potentially raising rates earlier. I like the Aussie and Kiwi down. They look fatigued. The local data hasn't been particularly exceptional, which is sort of a funny one because you see the RBNZ coming out, altering their forward guidance when things haven't really been lighting up. So something's going to give there. Now, don't forget, so you got US holiday today, UK holiday. We've also got non-farm payrolls on Friday, right, as well. So just bear that in mind because I don't think today is going to see particularly a huge amount of momentum. But looking at today, right, US equity futures, if you're looking for some sort of guide as to what's going on in the markets, well, a slight risk-on environment. And you can see the dollar block going up and the dollar pairs going down. So if anything, I know they haven't moved far. And if you look at these ranges here, well, let me just clear that up. You're looking at 10 or 15 points tops on the day. So it's not like jump out of bed and start buying euro, sterling, Aussie, Kiwi. They've hardly moved. We don't have a lot of direction just at the moment. Treasuries off a little. I tell you what, volatility is starting to get down to really low levels. Like the market doesn't expect anything crazy volatility coming up. I think that'll change as we get closer to the non-farm payrolls. But right at the moment, we are just sitting in a holding pattern, right? So good idea, start of the week, get your charts up, go through, sort out your support and resistance levels. If anything, clear out the dead wood from the previous levels. It's not a bad idea to sort of just freshen up your charts. And I'm just going to leave that spike in there for the moment, but there's not a huge amount of excitement in the market just at the moment for a Monday, right? Because they're, actually Kiwi, well, we've got a new support line here. It's dipped and gone down and come back. This is the day, Monday in particular, as I was just saying, good day to get your analysis done. So you know where the levels are that you could be getting in and out, etc. And just wait for the data to roll out. You can't change the fact that it's a public holiday in the UK and North America. So sit back, relax. If something random does come up, we'll make sure you've got your news pages up. I can't see anything at the moment that's really going to tantalize the market. But as I said, good time to really tune up your charts and work out where these key levels are. And don't forget last month, everything really kicked off with the non-farm payrolls, followed up with the following week with the CPI. It's all to play for the dollar. All we need is a bit of consistency. Now, the PCE price index numbers that I was talking about there, which came out Friday, these are good inflation numbers, right? So with these numbers, opportunities for the dollar to start to really come back strong. Now, the Fed have got to start to not only just start talking about adjusting policy. They've got to come out and do it with a firm hand. And I think, one good non-farm payrolls number and another CPI, they've got to do something, if anything, very soon. So hang on to your hats. Good trading conditions and direction aren't too far away. All right, guys, have a good one. Have a good week. Cheerio.